Hi everyone, now part two, the case study. We're going to focus on property developers. I know we were mentioning a bit of that in the first part, but that was more focused on property investors. Hi everyone, I've got Ish here from our SaaS Power Group and we're just going to have a quick little catch up. Don't you love this? Ish.
See, how are you, brother?
I love it, man. I want to ask you quickly, why do you love SaaS London? This is the key question.
See, the reason why I actually really appreciate SaaS London because it allows my clients to be as tax efficient as possible. Wow. I get to meet like-minded people, people who've got knowledge, a power team around me, which I can leverage off in terms of knowledge, even like yourself, in terms of structuring a company, whether that be insurance, finance, and it's a huge value add for all of my clients.
Love it. He's answered the second question I was going to ask. Why do you love meeting entrepreneurs? And he's explained why. It's huge.
It is huge. And I think the reason why I'm so appreciative of being a part of the Power Group is because I really want to help people become as tax efficient as possible. So with both incentives like land remediation and research and development, which a lot of people don't necessarily know about, I can really help entrepreneurs keep more cash in their pocket.
Don't you love it? That's the value. That's why you got to love SaaS London. Thank you, Ish.
Thank you, brother.
Perfect. Hi everyone, we've got Ricky from the Power Team, Stroke Power Group, whatever you want to call us, from SaaS London. Ricky.
How we doing?
Oh, love it. Ricky, why do you love SaaS London? The question.
Oh, no, I'm joking. SaaS London. So, to be fair, so I started coming to SaaS. Dan rang me and went, look, I'm putting together a networking meeting. I thought, oh no, not another networking meeting. So I went and, and I was pleasantly surprised because the calibre of people that I was meeting at Dan's event compared to some of the other events I go to, shouldn't really be throwing shade at other events, but the calibre of people was, it was pretty good. They knew what they was talking about. And to be fair, even when I was meeting people that was on the start of their journey, they was just interested and they was hungry to learn more. Whereas at other events, I weren't always getting that.
I think the key themes being is what type of entrepreneurs you're meeting at SaaS London. It seems like they're sophisticated and they're actually trying to add knowledge and take their journey forward. Is that fair to say?
Definitely.
And how do you help them? Because you're the master insurance, right? And we've been talking insurance today.
Yeah.
So you've helped a lot of people with their insurance needs and changed their mindset and educated them, right?
I think the one thing that we tend to focus on with it tends to be property investors, property developers, is just trying to get the rebuild sum insured correctly. And I think with the developers in the main, it's not how much they can do it for. It needs to be an agreed RICS valuation, and it's just helping people in that process and understanding it.
Love it. Huge value. Thank you.
Cheers, mate.
Cheers. Hi, everyone. It's another Love SaaS London one-on-one here with Ed.
Is he?
Ed, I love bigging up SaaS London. Why do you love SaaS London?
I love SaaS London because you get to meet all these different people who have different strategies and different views, different objectives in their lives, and you get to learn so much more outside of the bubble of what you do every day.
Wow. And also, Ed, how do you find the entrepreneur journey that SaaS London helps give people?
I think there are different entry points for the people who are joining SaaS London, and they get different outcomes from joining. You can meet people who are fairly inexperienced to those who have done many property deals in the past. And I love understanding where they are in that journey so we can find solutions for them and make the process better, and make their outcome better.
And I think that's the key thing, meeting like-minded people, and that's a constant theme, and then making their bespoke real activities, if I can say it right, make come true. And these are what Ed does. So thank you for that. Cheers. Hi everyone, I've got John here for another person from the SaaS Power Group. John, thank you.
Thank you very much.
The key question, why do you love SaaS London?
I've been to many networking events across the country. SaaS London's the one that I've really took to. I'm there pretty much every month. The reason I love it is that there's a wealth of knowledge within the room. For me personally, there's usually a bunch of my investors in there, there's a bunch of developers that are looking for funding, and there's a huge amount of knowledge between pretty much everyone in the room.
I think you put in a nutshell, how do you help entrepreneurs? I know we've touched on this. Give us a quick little update on that.
Yeah, right the way through. It's not just for what we offer at Source Capital. It's across the board. It's just having those conversations between me, one or two or three people in there. We'll often do a roundtable, so we'll help people answer their questions, because that's what networking is about. It's knowing what somebody wants to achieve and how can we get to that solution.
Just to add to that, investing that money from the pensions and getting a return. I think your average return over 5 years is what, 12% a year?
12% per annum, yeah.
Can you believe that? Tax-free. Don't you love it? Thank you, John.
Perfect. Thank you, Zeke.
Perfect. Cheers. Thank you. I love this. Or power team, whatever you want to call it, Usman.
Hey.
Thank you. And if anyone doesn't know Usman who he is, they will know now. Usman, why do you love SAS London? Let us know. Tell us. Come on. Don't be shy about this.
I'm not sure. I don't love it. It's work, and I just come and try and get paid, and that's the honest truth of it. I'm not going to stand here and lie, like, you know.
Oh my God,
Honesty
he's
is
such
the
a
best
liar.
policy, right?
He's a liar because yesterday he was running the party. Afterwards, I'm like, I'm going home now. He's like, I'm still here.
Yeah, I was.
And
No,
how-
I do love it. Everyone's decent. Everyone's a sophisticated investor. It's my type of networking event. Everyone knows what they're doing. The people in the room are solid. All the power team are solid. And everyone, yeah, the vibe is good.
And also, you love meeting entrepreneurs, right? And you meet, as you said, sophisticated entrepreneurs. How's that different to other networking that you've been to?
I'm fortunate enough to be someone who loves what I do, and so when I meet sophisticated investors, they fully take advantage of the service that I offer, and for that reason I add that value, they appreciate that value, and I get a client for life, and I love it for that reason.
Just to remind everyone, this is the Capital Allowance Entrepreneur Extraordinaire. He helps people get that cash-free income, so you gotta love it. Thank you, Usman.
Cheers,
Thank
buddy.
you so
Thanks a
much.
lot.
And just to recall to everyone, in case they're not sure what the difference between a property investor, property developer is, because the team was asking me as well, they love it. This is from a tax perspective. Property investors are people who buy property to rent out, and therefore they are considered investors, they get rental in. Property developers, who are entrepreneurs who buy property to develop, add some value, or build it from scratch to sell it. They're not going to hold it for rent. That's the two extremes. There is stuff in between which we're going to talk about as well. I wanted to define that because we know we've got a lot of fans who want to know the real ins and ends of property, right? So for all of those, just define that. Perfect. Don't you love it? Right, second one. Ed, going to start with you.
So,
right, you've done
yeah.
something recently as well for, I guess they are a property developer, but they're actually building it to hold, and it's a new build.
Yeah, I've got that in between client. Where
Love it.
they
Love it.
had a piece of land. They're first time property developers. So they've got a few contacts. Some of their family have done property development before. It wasn't completely sort of alien to them. But there was this plot of land which beautiful scenic area in Padstow, and they got planning permission on it to develop out this extremely large single unit, which was going to cost about $2.5 million to develop. In fact, that's what it ended up costing. To start off with, it was going to be about 1.7 or so.
Wow.
But obviously, build costs have gone up. So we took them through this journey, and we're financing this at the beginning of COVID, where a lot of lenders retreated. And they...
Can I just ask some questions on the
Go for it.
financing? Because this is quite important for the audience because they don't always understand the financing and the different facets. So they bought it for 750, was that? With the
It's
initial
about
amount?
half a million.
$500,000. So how much financing did they get for the $500,000 when they did the initial purchase?
They're actually quite fortunate because they could buy it outright in cash.
Wow. So that changed. So they didn't have
Yeah.
financing on the actual investment.
No,
of the asset
financing
initially.
for the land is it depends on what you're financing. Is there
Right.
a building there?
Yeah.
If the building's there, you can finance that. That's easier than just pure land. If it's just pure land, is it income generating? What's the value of it? Is there planning potential? Have they got experience of gaining planning permission
Wow.
on land before, a track record? So we can finance land, but we need to understand what it is.
Is it depends on whether it's a commercial finance or is it done on a residential? Because if it's land and it's rented, I guess you do it on a yield basis like commercial property. Is that right?
It depends what the end goal is, and it's
Right.
all about the client. But typically, it would be a pre-planning bridge,
Wow.
where you're
okay.
doing a bridging loan for a certain period of time to facilitate the planning permission and then the development. So recently, we did a 5-year land loan, where the clients had this plot of land with planning permission that wasn't what they wanted to build.
Right.
So we took them through a 5-year transition. They didn't need 5 years, but we gave them the comfort, same interest rate. There was no negative association with the longer term, but it meant that we didn't need to extend it because we all know what local councils are like with granting planning permission.
That's true. So this goes back to bespoke depending on what's in front of you, the toolbox, you pull out the right
Exactly,
tools.
exactly
Going back
right.
to that case study that you were talking about, the property person, the property developer, the halfway house, but he's actually, or she, there's a couple who are going to actually hold the property
Yeah.
for investment. So you helped him, obviously, got the planning or given them the planning from a financial perspective, but then you gave them development finance via bridge or a combination?
So it was in the COVID period in lockdown
Wow,
where
okay.
lenders weren't really too keen.
Yeah.
That coupled with first-time developer and luxury single asset is pretty difficult to finance.
Trust me, I've seen clients, what you're saying is true.
But it was a great project. We had their ultimate goal was to hold it for long-term holiday letting.
Wow.
So we had all of the supporting evidence. We had the income. The client had that association with his family who could help him with all the build process. So we got him alone with a bespoke specialist lender who
Wow.
who looked at the property and loved the project. Build costs and inflation obviously
Yeah.
got away, and throughout the build we had to extend the loan a couple of times over.
Wow.
But we managed to do that because also the GDV on beautiful special property in the countryside,
Went
as you
up.
remember, shot up.
Yeah, yeah.
So both worked together, and at the tail end, they had about early 2 million debt outstanding on a property worth 3.75 million.
Wow, there's
so
a big
we-
uplift.
So we managed to refinance it onto a long-term holiday let mortgage.
Wow.
And then also with the connections that we have here, which I'm sure Usman will talk about shortly.
Yeah, we'll get onto that. I think one of the things was, when they refinanced, did it cash flow?
Yeah, it
Excellent.
very strongly. Very strongly.
Wow, good ideas, huge value there. Don't you love it? We're going to move on to the insurance because that was sort of the next step in one of these process, wasn't it?
It was two-part, yeah. I mean, the insurance on a property like this is quite specialist.
Yeah, yeah.
So I knew who to call.
Cool. Right, I love it. It's like the old Ghostbusters. Who do you call, right? So
Yeah, so on
Ricky.
on this one, we come in at the end of the project, so we was obviously insuring a complete house, which makes things easier. And the client requirements were obviously he wanted to rent it out, but he also wanted to live in it for a certain amount of time a year as well. So we knew straight away on our panel, we knew there was one who's got a tailored product to exactly match. They're allowed to live in it to up to 6 months a year, as long as they rent it and can obviously prove that they rent it for the other 6 months of the year.
And what's
Wow.
also key in that is just making sure that it all correlates with the finance that we've done.
Yeah.
And actually, interestingly, for assets like that, where you do holiday let financing, when it's owned in personal name, you can occupy it for a certain period of the year as long as it's in the mortgage contract. So
Okay.
it worked perfectly.
Yeah, perfect. Yeah.
And I think one of the key things I mentioned is about structuring all this, all these different aspects. And that's the beauty of a power team. So for me, when I look at that, I'm thinking, how's that been structured, right? From an accountancy tax perspective, that's where I'm thinking about. Also, are we going to get financing? Is it going to meet all the requirements for insurance? All the things that you need to have in that journey. And I would, in this one, because of what they're planning to do, very important how they structure that. That going in potentially a limited company, if you're living there, ain't a good idea just for everybody, because you have the dreaded something called ATED, which I did a video with a Lambo on, that the tax if you have residential property in limited companies over $500,000, because all the Russian billionaires abused those, even though they're apparently all gone. But this is what's happened. And the second issue is something called benefit in kind. When you use a property, any asset, yourself personally in a company, it's got huge tax implications. So a good candidate is probably LLP or in joint names, which I think that's what they opened on in this one. Leads us nicely onto the next bit, which I'm going to talk about Ish here, because
Thanks, Eve.
Ish, you were mentioning previously about the difference between property investors and property developers.
Exactly.
And the rate of funding or percentage what you can claim changes as well for land and remediation relief, right?
That is totally correct. So in regards to land remediation, if you're a property developer,
Yeah.
the qualifying expenditure, you can actually claim up to 50% of that. So basically that's all of your staff costs, any subcontracted costs. However, with this client, which was riddled with Japanese knotweed, he didn't necessarily know. It almost kind of gave me a double whammy to both of my services. So once he was kind of converted the barn and actually wanted it to multiple and single dwellings, we helped him with the decontamination of that, of the qualifying expenditure which he actually put in, of 50%. then actually helped him from a research and development point of view as well. All of the staff costs, all of the material which he has used, which he didn't necessarily know about, all of the subcontractors he has used on the project, we actually helped him claim 33p out of every pound spent, and actually bought him a cash saving of £120,000.
Wow.
And-
And just to add, there's a clarification here. That's the part that's going to be in the company, I assume, because our land remediation is for limited companies.
Correct,
only, just for
correct,
R&D,
correct,
just to
yeah,
clarify.
correct.
Perfect.
And literally all of the costs which he has put
Wow.
into that building, he goes
Wow.
straight to capital allowance, straight to the big man Usman over there.
Yeah, I love that, because I think you've done a huge benefit there, and obviously the part of the planning was how you're going to structure this, which part's
Exactly.
going to stay in their names and what's going to go in the company, and that's where you've done all the work for the part that's going to go in the company.
Exactly.
Hence qualifies land remediation. For anyone who's watching, got Ish here, who's an expert in this area. He's talking about the benefits, and unfortunately you can't claim land remediation if it's not in a company.
Exactly, yes,
Government.
but a UK limited company.
That's it. Really important there. Just a bit like
Extremely
R&D
important, yeah.
tax credits as well. And you've heard nicely onto what happened after that
Correct.
to what you done, Usman. You helped a
So-
bit around the capital allowances on this claim because they were holding the property and they weren't actually selling it. So there's obviously a difference for you as well between a developer and investor.
At the pub. When you were, when you were proper pissed. And I was educating capital allowances at the time, just put that caveat in there.
I think you're mistaking me for.
No, but it came into fruition either which way, obviously. So yeah, essentially we did a desktop for the client, and we established that we'd find about £750,000 worth of allowances based on the £2.5 million that they'd spent developing the property. And it was easy because it's already cash earning, it's successful, the process has been kind of proven. We know that it's fully functioning, they're definitely going to need those allowances. We've just shelved it until nearer the time of the tax return is actually going to be due, and we'll get them the benefit at that time, so they get the benefit straight away. Qualifies for first year 100% relief, up to £1 million. And we're going to keep them tax-free for the foreseeable, however long it takes for them to earn £750,000 worth of rental profits as Airbnb. Just depends on how ambitious they are.
So just to clarify, the money that you claimed on this particular one,
We're
the
gonna
capital
claim, yeah,
allowances or in the process of claiming, is quite a bit, about £750,000. That's in the joint names, the one that's going to be
Split between them based on the percentage that they own the property.
excellent.
Yeah. And
So-
there's also there was the potential of kind of sideways relieving some of the income against other kind of income they have coming in. So there's loads of conversations we can have when it comes to the point, but there is a massive amount of value we can add to those guys in terms of what they do.
What was so
Excellent.
great there is, you know, before we had that chat, I didn't truly understand what you do because it is
Gareth forced me to sit next to you. Yeah.
because it is so for you, but it's so specialist.
He goes, "This is Ed. He's on his own, so sit with him." And I'm like, "Okay, fine."
It and it hasn't worked out too badly, has it?
Top guy. I couldn't believe the business synergies between us after that.
But
so I'm very glad.
That's what I picked up.
Yeah.
So I picked up all those angles where we could add value, and I thought of this case, and you know, immediately I had a chat with the client. And he said, "Yeah, I think my accountant knows about that. I think we're
Which is what we
looking at
get
it."
all the time, right? Yeah.
And I said, "No, you need to have this chat."
Yeah.
And now he's had this chat and discovered
And yeah.
£750,000 of capital allowances. And now I've had a chat with Yuzi about the wider profile,
Yeah.
and you immediately picked up on other businesses he's got.
Yeah.
Income from those going to go towards the use of the capital allowance.
Yeah, and I think one of the bits that obviously Usman packs a huge amount of value, as you know, right? Just unpack some of the things he said there. You mentioned the capital allowance of 750, and you mentioned something called sideways relief. Watch the video where we did a presentation in South London. We're talking how you use sideways relief. I'll just quickly explain that. So the first 750,000 is tax free. That's what he's saying, and because it's in their own names, there is no more tax. The tax is zero. And that's quite amazing. But in the year it happens, if they're working in a job, it sounds like they are, they can actually do something called a sideways relief and claim the income tax back on their employment job. There is specific rules, specific criteria. This sounds like it meets a lot of that, and there is limits on what you can do. So
up
get
to
good.
50k per annum. So yeah.
It's actually at least up to 50
Yeah.
or 25% of your gross income. So if they're earning more, they can actually claim more. And if it's two of them, a husband and wife, and they're both working,
yeah.
so huge amount. So there's a huge amount of money that they're going to make from the employment income as well. And you can take a step further as well about national insurance if you know how to do that, the salary sacrifice.
It is
But
complicated,
anyway.
so that's why we say they need to be in touch with the right people, because a lot of accountants don't know how to do sideways relief. They don't understand the mechanics of capital allowances,
Yeah.
the submissions and the guidance they need with regards to that, which is why, again, it's worthwhile
Clearly taking a specialist.
And it has to meet the criteria. So just having the
100%,
property
yeah.
and saying it's service accommodation or furnished holiday let doesn't
Isn't
cut
enough
it.
now.
No, it never has to be. It's got to be the amount of days and everything else. So you've got to make sure it has it qualified. Very important. We love that. And I think Ed was saying all the value you got from those conversations. And this is all from SAS London. Dan Torres, you're watching this. You made a match made in heaven here, right? And it's so important, right?
It's bringing it all together. For me to understand the solutions and then try and make a deal work in different ways, not just getting the finance.
And it's a bespoke value of having that overview process. That's why we wanted to split between property developers and property investors. And I think this reads nicely onto John.
Yeah.
Right? And John, yours is a different bit. Is what they do with the profits after, right?
Absolutely. So again, at that point with this individual,
Yeah.
they're then looking to potentially do another development. However, they might just be happy with what they've currently got. So they've got all this income coming through a company, personally, and then it's what do I do? What's a simple way for me to invest that? Through Source Capital, you can use an ISA. So an ISA, 20,000 per annum, you can invest that into a property development loan with us. Same returns, 12% per annum, and then that'll go back to them. So it's a different way of structuring a new style of investment if the funds are in a personal name. If that income's coming into a company, you can also reinvest that in a simple way. Unless they're looking to do another development, they then move into that investment era of what they're looking to achieve.
Wow. And then they're getting diversified some passive income, right?
Absolutely.
With the profits. So save money on the way in. That's the beauty of a SAS. If they've got limited companies or whatever they've put the money in from,
Yep.
they save the tax on the way in. They go into a tax-free environment. Now they're lending and building that pot in a tax-free
Another
environment,
tax-free
right?
environment,
So
absolutely.
they've double whammy, right?
Yeah.
So they're making money and then invest money to make more money. And it's that journey which you're helping clients with, right?
Yeah, absolutely. Right
Love
across
it.
the board.
Ricky, I think we talked about the insurance, didn't we? It feels like a bit thing because it's so important.
Yeah.
And I think one of the hardest things I find is people don't, I've been caught this and I learned the hard way, I'll be honest with you. I got insurance for my family house. But no one reads the small terms and there's certain things excluded. And I was like, why would they put that? Unless, and even you've asked a question, and I actually phoned them up, said, I asked that specific question, you said it was okay. Lucky they had that on the recording. Yeah, because in their terms it was different to what they said on the phone.
Wow, crazy.
And I learned from then you've got to go with a broker. Don't go direct to the banks or whatever if you've got building insurance and things like this because you don't know what you're getting and they don't even know because they're just working, no disrespect, in a call centre and they're just saying yes or no, right?
Definitely.
And then they're like, if someone remembers or they don't. And then you have to prove that you had that conversation and suddenly the phone call has been deleted or haven't kept it, right? So I was lucky, but that value that you talk about insurance is so important. Having that
Understanding the products, the products you're selling, going through the wordings and the specific endorsements with the client, just making sure, on a new build, electrical certs have been done, the gas has been signed off, just little things that maybe in a call centre, like you say, they just assume in and they're just not maybe asking the questions.
Not got the knowledge.
Yeah, maybe.
And I think you raised it for this was a new build, right? So it was a new build property. So it's got to have all that compliance done.
Yeah.
And if it hasn't, then the insurance is invalid, right?
Yeah, I think the interesting thing about this particular one, we sort of come in right at the end of the project and insured a completed house. We could have actually come in earlier than that and insured the work, so the ongoing, the progress, the contract works of the risk. So as they're building say for instance they get, how much was that to build? 2 million quid. If they had got say 50% through that and there was a fire, they didn't have any insurance for that. So they could have been £1 million, there could have been a fire, there could have been a storm, anything, and it could have been back to rubble, and then £1 million in the hole.
Yep.
So we can insure the contract, so the in-progress works as they're building it, and it will replace it to get back to the point that they was prior to the loss.
Amazing.
That's amazing. I didn't even think of that. But the premiums, how do they vary? Are they considerable during building? Because is there more risk?
Well, there's different rating methods. So we'll do it based on the total contract value, how long the contract's gonna take. They're sort of the two main points that underwriters will use to rate it. For something of that size, you're probably looking, somewhere between 5 and 10 grand for the in-progress works. I think the premium for this one was probably for the holiday home. Obviously, he's going to live in it as well. very, very high sum insured, 2.7 for one individual unit. I think the premium was about £3,000.
Wow. I guess one more question I get a lot, and I know some of the people I've known who's worked on Sky and things on this, they talk about the project management and the implications of having a building site, which blows your mind, scares you, to be honest, right? One of the insurance is protecting against any liabilities while running the project, even though you're not the builder, someone else is, but it's your land and it's your project, right? So is there insurance that you do to protect them on the process?
On this project, I think the owner was self-managing the project.
Got
So
it.
they should have had their own public liability in place for the slips, trips, third-party property damage, things like that.
Right.
Definitely.
Okay. But if they didn't have, and they had outsourced it, and most people do, most people don't build their own project, they just oversee it, right? What insurance would they...
The builder should have their own insurance in place to start with.
Yeah, of course.
So again, the contractor's all risk, which we talk about, the in-progress work, but that is payable to them. So in this instance, they should have had a joint name policy between the builder and the property owner or the property developer.
Wow.
In this case. So then the payment is paid to both of them to rebuild the structures that were already there.
Huge value Ricky's added. I didn't know some of that stuff. That's insurance going into deep. So Ricky's just mentioned, first of all, during the work, don't lose your investment, i.e. all the money that you're investing in the development. A lot of people don't insure it until the thing's built. That could be a big problem, especially when it's a few million. Secondly, making sure that insurance is joint between the builder and the owner of the land. Is that correct?
Definitely.
Is that commonly done? Because I've not heard many people do it that way. Is that because of lack of knowledge?
Yeah, it's more lack of knowledge than anything else.
And they're leaving themselves open.
And a lot of the time, the project manager or the owner of the property will be happy if the builder's got it in place.
Right.
But obviously that payment, that's their insurable interest, that's their policy. They're going to get paid that back.
Wow. Do you know what? That itself for me is quite big, because I personally would, any clients now will be saying, look, have you got your insurance, especially developers, because a lot of time property developers outsource to JCT contracts and things like this, and they think they've done everything, right? Because they've got it, they've got their costs nailed, penalty fines, fees and all the rest of it, but they don't think, hold on, the asset that they've bought, always going through process, either conversion or being built, that's not insured, and the risk of anything going wrong. So shows you why getting the right people around when you're doing entrepreneurs, especially property investors or developers, is huge. I just wanted to just check with yourself, Usman, before I forget, and there was one point around, obviously property developers who are selling the property, they can't claim capital allowances, but the person who buys them, and provided they're doing it, if it's commercial property or service accommodation, they've got opportunity to claim.
That would be the first entitled person to claim. The developer essentially owns the property, stock in trade. Stock in trade doesn't qualify for capital allowances, so the first party they sell it to is entitled to full capital allowances relief. But we are changing the developer's mindset. We have developers now who are, before they flip, they will retain it for a while, utilise it in a commercial capacity, either service accommodation or wherever it might be, draw as much income as they can out tax-free using the capital allowances, and then flip it. So they can retain their original MO, but make some money out of it before they
I think there's a problem with that, and I'll explain to you why. The problem, not for the capital allowances perspective, but for their overall taxation, because they're changing the status of the business. Yeah, because right now...
From stock and trade to a trading investment business.
And that's huge, because that can trigger capital gains tax off.
Okay, but you can offset the capital gains tax against the capital allowances that you've
potentially. But if you're changing it, you're losing that ability.
But then we change their mindset, so they hold it as an investment before they start to develop. If we build that relationship beforehand and we get it right in the beginning with the structure, as you say, they won't have that issue.
Fair point.
This is what we're trying to do. So when we meet them, they're obviously that's their MO, but then we educate them going forward, do it this way.
The biggest thing that they lose out when then developers have special rules as well, and there's a reason why they've got this. It's called the stock and obviously investment. One of the biggest issues is for developers is that when they exit, because they've got a trading business, they can claim something depending on how long the development of their business. Something called, it used to be called entrepreneurs relief, now it's called business asset disposal relief. The investors can claim investors relief, which is still at £10 million. Many people don't know how to use that. They can also claim something called substantial share exemption, which they can't do as an investor. That makes zero, if I'm allowed to say, on their CGT or corporation tax. they lose all of this. So that's why they got to be very careful.
It doesn't work for everyone, but some people...
And VAT.
Yeah, sure.
VAT is one of the worst because all the VAT they've claimed back was based on a trading business, right? Okay, not an investment, because a lot of this property isn't VATable. So they could have a clawback, right? So you've got to think, there's I think a famous case, Kurtz or Edison, worth looking at, getting on case law now. But you need to understand this. So they need to really be clear on what they're doing, what their objectives are, because there's so many different implications just by claiming capital allowances.
But on large developments where they spent millions developing these properties and the allowances are going to be in the millions, it does change their mindset. Because even
but
then,
the costs are in the millions then, right? So if you think about the VAT, right, that they've claimed back on that, think about the capital gains tax implications and entrepreneurs relief that they've got, or substantial share exemption. This is massive. If I'm paying corporation tax at 25% now, that's what corporation tax is, right? That is massive for a limited company, right? If I could save that and go again, because I'm keeping the gross amount of money, I can't do that as an investor. And I've triggered CGT off without selling it. This is why developers to investors, that's why I was being very clear, you have to be very careful, get the right advice end to end, which you mentioned as well, is depending on what they want to achieve, get it set up right, let them know the implications, which you quite clearly
not halfway
stated.
through, no.
Yeah, because if you change, and I hope I brought it home to everyone, huge implications. That's why you need someone who understands property, understands the end to end and how to mitigate, right? Because sometimes things do change.
Sure.
But you need to know what that means. And I think I find this a lot of people don't, and they interrelate property development and property investment. They are treated totally differently, even though they're both property. Yeah, I think this has been a great session, lads. You know, we're going to have some more people next time as well, I'm sure, who are helping the SAS London. And I know, as I keep on mentioning, I'm going to plug Dan Torres again. You missed a whole lot of party, look. Right, but we're adding value here. While you're recovering, I'm sure you'll be helping share this, but it shows what you've done by creating such a great community.
100%.
And it's all about community, right, guys? And it's trying to understand how you can help each other and build those relationships, chatting. And I think this has been a great thing. And thank you for coming down. See us.
Cheers, everyone.
Thanks for having us, mate.
Hope you guys got value. Please do like and comment below if you found value in this. Anything else you want us to talk about, any other entrepreneurs, any other professions that can help you on your entrepreneur journey, whether they're professionals or like-minded people, let us know. We're happy to connect people where we can. Also, you can comment and ask for these lovely gentlemen who can help you on your business and entrepreneur journey. We will put them in the post, and depending on where you're seeing this on social media, you can contact us and we will do our best to connect you. Thank you so much.